She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
I'm Debbie Marcoux, and I am the Mortgage Mom. I'm licensed by the Department of Financial Protection and Innovation under the California Business Consumer Services and Housing Agency, NMLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Hawaii 237926, Idaho MLO 208-023-7926, Illinois 031.005-8339, Nevada 57237, North Carolina I-210940, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
This is Debbie Marcoux, the Mortgage Mom. I just wanted to remind you that when you think of something that you need in real estate or mortgage, to think about Mortgage Mom Radio. We can help you with your purchase, your sale, your refinance, your home equity line of credit, reverse mortgage, hard money, construction, you name it, we're here to help. So give us a call. It's 844-935-3634. That's 844-WE-LEND-FOR-YOU. WELEND and the number 4. Or head on over to my website at mortgagemomradio.com. All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. I have not been on for 6 weeks or something crazy. So you guys probably cannot see it, but I've got, let's see, a hole right here. This was some skin cancer that they cut out. Now I've got more skin cancer right here that you can't see under the Band-Aid that they're going to cut out on December the 9th. And then the Band-Aid is actually, I'm backwards. The Band-Aid is actually 2 new biopsies that they did. So those are healing at the moment. Then I had this way. I had some skin cancer here that was cut out and then ended up getting infected. So I know I told you guys all I was going to be back next week, and then all of a sudden I wasn't back. I've had some skin cancer on my shoulder, on my back. I've got a brand new biopsy here on this shoulder, and I have 3 biopsies on my back right now. So I do want to ask everybody to just bear with me. I'm going to do these shows live as often as I possibly can. It is something that obviously when they do the surgery on December the 9th on what did come back as cancer, that's going to be another gaping hole in my forehead. Probably won't feel good for about 2 or 3 weeks before I'd be able to get on and do the show. So what I have implemented, because there is so much information that is coming to us fast and rapid fire, such as those portable mortgages and the 50-year terms that people have been talking about. So that is what we're going to talk about in this episode. But I have implemented a new newsletter that I am sending out by email, and I'm sending it out about once every 7 to 10 days. That way I can keep you guys abreast of any changes that are happening in the market, even if I don't happen to be able to come to you live. So if you would like to get that email with that newsletter when I send them out, and you don't get emails from me already, please reach out to me. You can either text me to my office number 844-935-3634. Just send me a text, give me your first and last name and your email address, and I will make sure that I get you added to my newsletter distribution. You can also send me an email, Debbie@mortgagemomradio.com, and I'd be happy to add you there as well. So I do see, it looks like Mary jumped on. It just says user and a bunch of numbers. It doesn't actually say her name today, but I could see her picture. She says, hope you heal up quick, Deb. So thank you so much. I'm hoping I do heal up fast as well. But I've got quite a few more ahead of me, and I want to make sure that I am keeping you guys up to date. So if I can't jump on and do a show, I at least want to get those newsletters out. So if you're not already getting getting a newsletter from me by email, then please make sure you either send me a text with your name and email address or send me an email and just let me know, and I'll make sure that I get you added to that distribution. So here we go. Let's actually get into today's show. Enough about me. We are talking today. Let's catch up on the market. You guys haven't seen me. I haven't talked to you in about 6 weeks. Like I said, was probably the last time I did a show, and a lot has happened. So since the last time that I got on and did a show for you, we've had the Federal Reserve that cut interest rates. You guys have heard me talk about that before, that when we know that there is a rate cut coming, we will typically see those interest rates on our mortgage rate sheets improve even prior to the Federal Reserve making those announcements. That is exactly what happened this time when they cut the rate back about 2 weeks ago. It might have been 3 weeks ago, but it was, just recently happened. As soon as we saw interest rates get phenomenally better all the way up until the day of the announcement. The day of the announcement and every day remaining after that, interest rates actually started to go the wrong direction. So we are lower right now than we were this time last year. We are lower right now than we were 6 weeks ago, 8 weeks ago, but we are higher today than where we were the day before the Fed made their announcement that they were going to cut rates. So if you have been thinking about buying a home, if you've been thinking about refinancing, you need to listen. You guys need to understand kind of where the ebb and flows are with our rates and with our market. I can tell you that it is looking very positive as of today. Things can change very quickly, but it is looking very positive that at the next Fed meeting in December that we are going to get another rate cut. It is still too soon right now for those, that next rate cut to get started and working its way into our rate sheets, but that will be coming within the next week or two. So make sure that you guys are staying, in contact with me, getting those newsletters, watching the show. Can you guys see my big dog? Hey, Obi. Hey, can everybody see Obi? He's here today. So if you guys remember, I did a show with him. He was a little bitty baby and I was holding him in my lap. This is not a little baby anymore, but he is here for the day at work. So but make sure that you guys are staying, in tune with me as I'm talking about what's happening. And if I let you know that rates are lowest they've been, this is kind of your window to get something locked in. Take advantage of that. I have a lot of clients that could have started an FHA streamline refinance, chose not to, didn't think it was a big deal, figured when the rate cut came, things would continue to improve. And that just didn't happen. We're actually up a little bit. I would say we've lost about 0.25% in interest rate. We've gone up that much since the day before the Fed cut the rates. So stay tuned. We're going to get close into that next meeting coming into December. It's going to be, I believe it's first week of December, if I'm not mistaken, December 9th, somewhere in that range. So make sure that you guys are watching and, getting my updates and my newsletters. So I want to talk about portable mortgages. I think that this is a big deal right now. You're hearing a lot of people on social media discuss it. You're hearing that, people in government have been talking about whether or not that's something that they should implement or they should allow or they should approve. So let's talk a little bit about those, right? So let's start with a 50-year term. Why are there so many people bashing the 50-year mortgage loan? Okay, so there's two sides of this equation. There's a positive and a negative, of course. The positive being that it would make monthly payments lower, making things more affordable for somebody that would, wants to buy something, but they just need that payment to be lower while interest rates are still higher. So the idea of a 50-year term is a good idea for somebody as far as affordability goes. Now, it's a terrible idea as far as if your goal is to actually get the property paid off. So, think about, many first-time homebuyers are in their, mid 30s, early 40s. I can't even tell you how many clients that I've worked with that are in their later 50s, early 60s, first time they've ever bought a home before, and now they're signing up for a 50-year mortgage. If the goal in your planning and your financial planning is that you want to get your mortgage paid off, a 50-year term would be very difficult to make that happen. You think about 50 years from today. Now, the other thing I'd like to do is kind of give you an idea of what the difference in monthly payment would be. Is it a substantial enough savings that it makes sense to put people at risk of signing up for a mortgage that they may never pay off? So I did a quick calculation for you on a $600,000 purchase, just to throw out a number, 20% down payment, interest rate 6.5%. So just very just kind of standard terms. I'm not quoting you guys rates. I'm not doing anything. I'm just trying to show you differences. Okay. So 600,000 purchase price, 20% down payment, 6.5% interest rate, 30-year term, principal and interest. We don't care about taxes. We don't care about homeowners insurance, not for comparison reasons. So that monthly payment would be $3,034. Now, and that's monthly. If I change this to a 50-year term, that goes down to $2,706. So, is that a big enough savings? Is $300 a big enough savings per month that it makes sense to put people at risk or at jeopardy? And the amount of additional interest that you'd pay on a loan if you never paid more than just the minimum due because you are financing it over an additional 20 years, I absolutely don't think so. I don't think that that is something that makes sense. And I can see why so many people kind of went crazy up in arms over this is not a good idea. A 50-year term is not something that we should be considering. Now, if you are the person that says, hey, I just want to get in for the least amount of money every month, I just want to make this as cheap as possible, I'm never paying this mortgage off, that is not what my financial plan is. That is not my financial goal. Okay, well, you are a different person. You are not a standard first-time buyer that is looking at affordability, that is trying to get into their first home, maybe putting, a small limited down payment down. You are somebody, if you are looking at, I'm never paying this off, I want the cheapest monthly payment, I can do other things with my money, I can invest them in other places, paying off the mortgage is not what I'm concerned with. You're a different kind of investor, and you should be possibly looking at doing interest-only financing. And an interest-only loan is going to be a very similar savings, if not even larger, than the difference between a 30-year term and a 50-year term. So if you are somebody that would be interested in talking about interest only or wanting to understand more or getting more information about that, remember that I'm a real person. I have an office. You guys are welcome to call me. You are welcome to email me. You can go to my website. You can click on the contact us. You can send me an email. You can set up an appointment with me, a phone consultation. I would be happy to talk to you about interest-only options and interest-only mortgages if that is something that you feel would be beneficial for you. But for the standard home buyer, first-time buyer that doesn't understand, financing, that's scraping the money together to get into the property, that's only going to be able to afford to make the minimum payment due, really, I have to agree with all of those that are kind of up in arms and throwing a fit over a 50-year term and that it was a very bad idea. So I'm going to have to agree with that one. If you guys have any questions, I do want to remind you that this is an open show. You guys are more than welcome to put your questions into the feed. I will read them out loud. I will answer them for you. It is absolutely not a problem. I am happy to help. If you have a question, there's a very good chance that there is somebody else watching that has the same question. So if you are bold enough to put something into the feed, please do so, because you are only going to be helping others. So let's talk about this portable mortgage, okay? And I actually made some notes that I'm going to pull up. So if it doesn't look like I am looking at you guys, it is not because I am just kind of off and lost in space. I am going to be reading my screen, so I'm not necessarily looking straight at you. But a portable mortgage, to kind of dumb it down and make it really simple, would be if mortgage lenders, so let's just say for those of you that have a mortgage loan that is under really in today's environment, anything under 6%, right? If you've got a 5.25, well, let's say 5.25, yeah, probably 5.25 or below. Okay. And there are so many people that have not sold homes. They have not moved. They have not bought something new. They have put their plans on hold because the current mortgage that they have on their current home is really sub 4. It's in the 3s. Some people got lucky enough to get into the 2s, 2.75, 2.99. We were seeing those for a while with shorter terms, 15 years, 20-year terms. So if you were one of those people, you're kind of feeling stuck and you're feeling like, I really don't want to go and buy something else because I'm going to lose this interest rate that I've got. That is where a portable mortgage, should they come out and decide that it is something available, would be very beneficial. Now, it is going to change the whole dynamics of the mortgage lending industry. It will probably be something that if you want to do that, you're working with your current lender. You've got to call the 800 number on your statement. You're not going to come to somebody like me who's going to help you get moved into the next property. It's going to be a slower process. It's going to take real estate agents longer escrows to close, but is it going to open up more people to be able to do transactions, transfer houses, sell homes, and get more real estate movement? Absolutely, it will. Okay, so I'm going to read, there's a couple of questions and then I'm going to get into the nitty gritty of the portable mortgages. So I can see that Tiffany got on. She says, what if you make extra payments when you can do so? Would that help? So Tiffany, yes, going back to the 50-year loan or 30-year loan, absolutely. Whenever you can make an additional monthly payment or you can add $100 or $200 to the payment that you make every month, that is absolutely beneficial in every single kind of loan. So whether you've got a 30-year, a 15-year, a 20-year, if they were to roll out a 50-year for some reason, it's always beneficial. It's going to pay that balance down quicker. You're going to pay less in interest. So I always recommend that you do that. But going back to that 50-year, the whole reason that they're saying, hey, we don't like this idea. And I'm going to be honest with you, doing this for 30 years and originating loans for 30 years now, most people pay the minimum payment due. No matter how hard they try, no matter what they say, they go to the car dealership, they sign up for that loan, and they take the lowest monthly payment so that they've got something to fall back on, and they tell themselves they're going to pay higher, they're going to pay more every month to get that car paid off quicker. And the same goes with the house, but something comes up. Something always gets in the way, right? That's where we always laugh about a dog. You finally got a little bit of extra money in your bank account and your dog gets sick and you have to go to the vet. So it does make it very difficult to pay that extra even when you've got the very best of intentions. And so that's why I think that they're being so hard on, the idea of rolling out that 50-year term. I love the questions. So you guys keep them coming. So thank you, Tiffany. Thank you so much. So Mary says, how much more would we qualify for with a 50-year loan? So that's actually a great question. And Mary, it's going to depend on the size of the loan. It's going to depend on the interest rate, obviously, because the difference between what the 30-year loan would be and what the 50-year loan will be the monthly savings. And then that is going to determine how much more that you'd qualify for in, let's say, sales price. So in the example that I gave, if we did a 30-year loan at 6.5% for a $600,000 purchase price with 20% down payment, it was a $300 monthly payment that was more than what it would have been if it were a 50-year term. And by the way, I haven't even mentioned this, but the longer that the term is, the longer that the mortgage is, the higher that the interest rate is. So the chances of you being offered the exact same interest rate for the option of a 30 or an option of a 50 is very slim to none. So realistically, that 50 would probably be 6.75 to 6.875 if the 30-year loan was at 6.5. So, in reality, it's not even going to be that $300 a month savings. But that is for that scenario. If you've got $1 million loan, that monthly savings is going to be larger because obviously the loan size is bigger. But how much more will you qualify for? $300 just to give a general idea, is usually about $50,000 to $60,000. So you might be able to qualify, let's say you were at 600,000 qualifying. Now you might be able to qualify for, 650 or 660. So not a huge difference. Again, I don't know if it's a big enough difference that it makes sense the amount of just sheer interest that you would pay if you never paid more than the minimum that was due. Okay. And then Mary says, interest rate was my next question. Thank you. So you're very welcome. So yeah, I mean, just, if you think about it, a 15-year note is going to be a lower interest rate when you get a rate quote than a 30-year would be. And obviously, if they were to roll out a program like a 50 is going to have a much higher interest rate than the 30. So, chances are it's even going to be a much less savings than what we're talking about right now today. Again, kind of blowing out the idea that a 50-year note is probably not a good idea, or it's not the best solution. But we'll see, right? It's not up to us, and people can get upset and they can get irritated and they can say all they want and they can go on social media and they can post. But at the end of the day, it comes down to the lawmakers and whether or not they approve it. A 50-year note, the reason that you don't see those currently is all of our mortgage guidelines and our industry goes through regulations, and we are governed by the CFPB. And so they have to approve something like that. They have to determine that that is something that is a qualified mortgage for clients or for borrowers to obtain. So it is not something that is an option right now. Now, I think that the biggest thing that we might see come to play is going to be these portable mortgages. I think that that is something that very, very well may come to fruition. I don't know that it's going to be a standard. It gets voted on, and now every bank that has, carries mortgage loans, is servicing mortgage loans, has to abide. It might be something that it will be left up to the lenders that are servicing your notes. So when I say that, if you already have a mortgage, because this portable mortgage thing is really for those people that already have a mortgage in place and have an interest rate of 3% or 4% or even 5%, and they can't get that rate today. So you are somebody that already has a mortgage in place. If your lender is PennyMac and PennyMac is unwilling to do it, then that might be something that you wouldn't be eligible for it. It might be something that they lay down the law and they tell all these servicing lenders that they have to do it, that they have to offer it. So there is so much to come. Information to come out about it. It is not something that is available today. You cannot get your hands on it today. Everybody is hearing about it. It's a question that is coming up. And I do want you guys to understand more how it would work. So we're going to talk about it. But is it available as of today? No. Could it and will it most likely absolutely change our lending and real estate, market? Absolutely, because there are going to be more transactions happening, and there's going to be more people like me, loan originators, that are not going to be able to help, which is going to be kind of a detriment to a real estate agent when they're doing these types of transactions. It's going to be very, very similar to when somebody, when they assume like a VA or an FHA loan. So assumable mortgages are out there today, and a buyer can come in. And if somebody has a mortgage that is an assumable mortgage, the buyer can't assume the seller's mortgage. They have to go through the servicing lender. They can't just call a loan officer that's going to get things done super fast. And you kind of are tied to that time frame of that servicing lender, which can take anywhere from, 45 to 120 days, which could slow up a transaction, but it might also help get people moving, which would be more transactions. So there's going to be a lot of light to come that will get shed on this, and, kind of see how things are going as time moves forward. I do see a question that says, hello, Debbie, wishing you all the best. Keep in mind, everyone on a 50-year, most likely you will probably lose all of your equity. So you don't lose your equity. you just pay the balance down so slowly. You are paying so much money in interest that it's going to be very, very difficult. I mean, to get the balance paid down, to gain equity, unless the property appreciates in value. So it is still a principal and interest payment, which means that you are paying all of the interest. It is not a negative amortization. You're not going backwards in what you owe. Every time you make a payment, sure, maybe $100 goes towards paying your balance down. So, you are kind of bringing that balance down, but it's very, very little, and it's very, very slowly, and it's not making a huge dent. So really, I have to disagree with you a little bit in that you're not losing your equity, but you're not gaining any equity. It is very, very similar to basically paying interest only. You are paying the minimum payment due, and you are keeping your balance just right there. It's never moving. So if property values decline and your balance doesn't move, you could end up losing equity. That is an option, but that would happen to anybody no matter what type of loan they had. If property values increase, you will still gain equity in the home. You are still a homeowner. So again, there's positives and negatives to this idea that they've thrown out of that 50-year note. But you are not going to lose equity. But it was great. I love that you guys are engaging, and I love that you're putting up your ideas. And I love that I can explain what the answer is, and you guys can see that with sincerity that, I mean my answers, and I want you guys to get the education. So please keep them coming. Keep the questions coming. So I'm going to let you guys ask me a couple more questions about the 50-year note while I run like a 60-second commercial. If I see more questions come in, I will read those and keep going. If I don't see any more questions about 50-year, then we're going to jump kind of more deep into these portable mortgage. So stay tuned. Hold on, let me find my commercial. Here we go. We'll be right back. Hi, I'm Debbie Marcoux, the Mortgage Mom. Have you been waiting to get a debt consolidation done? You want to refinance, you want to pay off your debts, you want to do some home improvement. Maybe you've had your plans on hold forever. You want to sell, you want to move, you want to downsize, you need to upgrade, but you have been waiting for these interest rates to come down. Well, now is your chance. The Federal Reserve just cut interest rates by 0.25% today. They're talking about doing this again, possibly up to 3 times by the end of 2025. So this is your chance to give me a call, to reach out, to talk to me about your goals, and to get things started. How do you do that? Well, you call my office. It's 844-935-3634. That's 844-WE-LEND-FOR-YOU. WELEND and the number 4. You can also head on over to my website at mortgagemomradio.com. I do have a contact us button there, or send me an email to debbie@mortgagemomradio.com. Talk to y'all real soon. Bye-bye. Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And I did not see any more questions come in about the 50-year term. But if you have more questions, I'm not cutting you off. Please feel free to throw those into the feed. I will still read them out loud. I will answer them for you. This is an open conversation type of show. You can actually ask me something that's not even about today's topic, and I am more than happy to read it and give you guys answers. So please think of this as your place to ask questions without being put on the spot and having to give me your contact information. So please feel free. So Tiffany does say, looking at the bigger picture, would a 50-year loan still be better than paying for rent? So Tiffany, yes, I absolutely, the whole reason that these ideas have come about is so that we can try to help people get into homes because of affordability. So the idea of, hey, if we did a 50-year note and we could lower the monthly payment, maybe more people would be able to purchase, making homes more affordable. So the end goal of the idea was making things more affordable, getting people out of renting, getting people into homes. Now they're not renting. Now they are actually gaining equity in something that is appreciating. Even if that monthly payment is barely paying the balance down, they are still a homeowner. They've still got an interest tax deduction. They've got property tax deduction. They've got pride of ownership because it's theirs. They can paint walls. They can maintenance things the way they want. They can, put solar panels to save on electricity. The end of the day, the idea behind the 50-year mortgage is to help more people be able to afford to get into the market. So 100%, I would say yes to your question. However, when you look at what's the actual savings, on a $600,000 purchase, saving $300 a month and gaining you 50 or 60,000 and how much of a purchase price that you could achieve or you could afford, is that enough to put somebody back as far as, almost doubling the interest that they would pay on that loan if they were to continue to make those minimum monthly payments. So, you're talking about a lot of money in interest. I really should have done those calculations. It wasn't something that I thought about before I started the show. But if anybody is interested to understand what the difference in the actual overall interest paid on a 30-year term versus a 50-year term, please feel free. You guys can text me, email me, call me. I am happy to run those numbers, especially if you're just curious and you'd like to know what that difference is. But we're talking, depending on the loan size, hundreds of thousands to millions of difference in what you would pay and the overall interest of that loan. So again, the idea was get more people into housing, get more people into home ownership. But I think that the actual repercussions of what that product would do would maybe not really offset the benefit. So love it. Love the question. Love you guys. Please keep them coming. Happy to keep going. So I'm going to kind of read to you guys, because this is probably the easiest way to explain the portable mortgages. So I made notes, but I'm going to read these to you guys. This is just Google, Google's AI, and I think that they literally did it perfectly. So I'm going to just read this to you, and then we will jump into any questions that you might have about it. So a portable mortgage is a type of home loan feature that allows a homeowner to transfer their existing mortgage, including the remaining interest rate and terms, from their current home to a new property. This is different from the standard U.S. practice where a mortgage is paid off when the home is sold, requiring a new loan at current market rates for the next purchase. So I do want to make sure that I point out something there for you guys, because yes, it sounds fabulous that you could take your current sub 3% note or 4% or 5% note with you to a new property. But when you took that loan, I was originating. So I'm telling you that if you have a loan that is under 5%, you most likely, 95% of you, took one of those mortgages in 2022, 2021, or 2020. Okay. The property values have gone up significantly since those years. So you're going to sell your home for more than what you owe. Yes. You're going to get equity out of your home. Yes. But if you go and you buy another home, just keep in mind that if you're going to use a portable mortgage option, which I have to remind you guys is not available yet today, but when and if they do bring this to the table, you would only be able to transfer over the current balance that you have on your loan today. So if you only have a balance of $400,000, the next house that you buy, you're going to have to come up with the whole difference in cash in order to bring that note over. Okay. So one really important thing for you guys to keep in mind as you're thinking about, is this good? Is this not? I think it's fabulous. I think it would be really beneficial. I think that it's going to be kind of clunky. I think it's going to be difficult for real estate agents because it's going to be a much slower escrow and closing process than what they're used to. But I do think it's going to create a lot more transactions if this is something that they do, come up with terms for, and they do approve this idea through Fannie or Freddie or whoever needs to do their job. Okay, so Availability, okay? Portable mortgages are currently rare in the United States as the U.S. housing finance system is built around 15 or 30-year fixed rate mortgages that are bundled into mortgage-backed securities, which is, again, you guys have heard me talk about where do our mortgage rates come from? They come from mortgage-backed securities. All your mortgages are in these securities that all these investors buy, and whether they're feeling like those are a good deal that day or a bad deal that day moves our interest rates. So this system makes portability difficult to implement because they're all in a big, huge thing, right? They are, however, common in countries like Canada and the United Kingdom, which typically have shorter fixed rate periods, 2 to 5 years. So those would be more of adjustable rate mortgages. How it works, theoretically, same lender, porting usually requires you to stay with your current lender. Requalification. The borrower must still requalify for the mortgage based on their current income, debt, and credit score. So this would not be something that, oh, I qualified for it back 3 years ago. I lost my job or my credit went, I had issues. My credit fell. My credit score went down. I filed bankruptcy. Like, this is not a solve for somebody that does own a home today, does have a mortgage today, wants to buy a different property. And so this would be the easiest way to do it. They don't have to qualify. You are still going to requalify. Okay. Price differences. So if the new home is more expensive, the existing low rate mortgage is ported and a second loan for the difference is taken out, likely at the current higher market rate. The two rates are often blended into one overall rate. So what this is saying is that, and they are giving you, there are no rules right now here. Okay. This is not an option that's available. Nobody's come out with any terms of how it's going to work. This is how it's been working in where they said Canada and, where did they say? Let's see. It's common in, I totally lost it now. Let's see. The United Kingdom and Canada. Okay. So this is kind of how they work in those areas, right? We have yet to say how exactly it's going to work. So the difference of whatever you would be shortfall to come up with, maybe they're going to let you guys do a second mortgage, like a home equity line of credit that could be written and put behind what you currently owe on the current mortgage at the lower interest rate. So that might be something that might come up as an opportunity. Maybe that current lender that's holding that note says, well, your current rate's for, you're short 200,000. So we're going to blend that rate together with current rates today at 7 or 6 or whatever it is at that time. And now your actual new note rate and new paperwork is going to be at an interest rate of 4.5. You're no longer at 3 on that first. So we don't know yet, right? This is just all speculative if this is something that comes to play. So let's see, we already read that part. So potential pros, and I do see comments and I'm going to read them. So keep them coming, you guys. I just want to finish reading these pieces and then I'm going to look at you guys and I'm going to read them for you. Potential pros. Oh, hold on. Wait, we missed this one. If the new home is cheaper, the mortgage balance is reduced, but a prepayment penalty may apply to the unused portion of the loan. So I don't know how they would do that here in the U.S. If maybe the current mortgage has a prepayment penalty on it and you were going to pay it down, and in the current terms there was a prepayment penalty term in the current note, then I would think that they would probably just adhere to that prepayment penalty that is already written in that current note that you have. But any mortgage in the United States that is for a primary residence since the Dodd-Frank Act, which I believe was in 2008 or 9, I'd have to go back and look it up again, but it's been some time. It is not legal for a mortgage lender to give a prepayment penalty on anybody, any type of loan. It doesn't matter if it is a subprime, hard money. We cannot put a prepayment penalty on any owner-occupied property. So it is very, very uncommon that somebody that's trying to port a mortgage that they took out in 2020, 2021, or 2022 would have a prepayment penalty within their current terms. So I'm not jiving with this, but obviously, again, nothing's been decided. There's no information. And this is not something that is available yet today. So we're just being speculative at this point. So potential pros, allows homeowners to keep their current potentially low interest rate when moving, helps avoid early mortgage prepayment penalties. Again, there's really no prepayment penalties in the United States for your primary residence. There could be prepayment penalties on investment properties and second homes. So vacation properties, investment properties, those you could have a prepayment penalty on. And it would, obviously, if you don't pay the note off, you're just transferring it to another property and you were within your prepayment period term, you'd be able to avoid that. But again, most prepayment penalties are anywhere from 6 months to, on average, 3 years. I mean, I've seen them go as long as 5 years. I have never written one like that before. I think the longest I have ever written in my 30-year career was a 3-year prepayment penalty. And I would say that the majority of the notes that are lower than what you could get in today's market were written way more than 3 years ago. So I don't think that that's going to be a huge benefit. Could increase housing market activity by encouraging rate-locked homeowners to sell their homes. And that I absolutely agree with. And I do think that we would see more transactions happening within our market. Potential cons and challenges may not address the core housing affordability issues for renters and first-time buyers. So it wouldn't. Would it address somebody that already owns a home, that has potentially decided not to move, even though the normal course of action in this time of their life would be to move? So let's talk about that for a minute. So somebody that owns a house, bought it, 2-bedroom, had two kids since they bought that first property, would normally sell that home and move up into a 3-bedroom or a 4-bedroom home because their house is growing and they need more room. They have not been able to do that because it's not as affordable as just staying where they're at. So we're seeing more people just deal and live in the smaller quarters. We're seeing more people do additions and add bedrooms and bathrooms to their current home, and they're not selling and they're not moving as they typically would. We're seeing more people that are ready for retirement. They're empty nesters. The kids have all moved out. They've gone away. They've gotten married. They've had grandkids. They've gone just off to college. But the end goal is, they don't need this big house anymore. And, they want to go out to the desert and they want to retire in something smaller. They don't want the backyard. They don't want the 2-story, whatever that normal progression of life typically would be. We are not seeing any of that movement right now. So I do think that we would see more of that movement, but it absolutely is not going to help that first-time home buyer or that affordability issue that we have going with trying to get new buyers and new homeowners into the market. So let's see. So I see Josie. Josie, so good to see you. She says, hello, Debbie. I'm declaring with gratitude that you are in the path of healing. Josie, thank you so much. I appreciate that so much. And guys, I do want to tell you, yes, it is skin cancer. Yes, it is something that I'm battling. And when I say that I am battling it in a way of it is frustrating. It is annoying. I don't like having my face cut open. It's my face. I don't like going through the healing. I don't like the stitches. I don't like all of the bandages. I am so over Band-Aids and tape at this point. I can't even tell you. But I have been very, very lucky in that everything that has come up that way has been basal cell or squamous cell. I've had no melanoma. I've had no Merkel cell. I have not had any of those dangerous cancers at this point. I am waiting on test results of 7 biopsies right now that I will get over the next week and 2 weeks. So pray that we don't see any of those aggressive types of cancers. But what I have been dealing with, am I going to be fine? I am absolutely going to be fine. There is nothing going to happen to me. I'm just a baby and I'm frustrated and I'm over it and I'm tired of, the healing and the stitches and the bandages. But I am very, very lucky. I'm very, very grateful. I'll take the scars on my face. I will take, the itchy Band-Aids and the medicines and the antibiotics and everything that I've been on. I will take all of that all day long over getting a diagnosis of a melanoma or any other kind of cancer. So, Josie, thank you so much. Thank you very much, you guys, all of you. And again, like I said, I'm going to do as many of these shows as I can. December the 9th, I'm having another surgery. So you guys are going to see me each Wednesday up until that day. And then on that day, you probably won't see me again for 2 or 3 weeks while I'm healing. And then I'll be back again unless one of these new 7 biopsies we don't have results on yet come back as, not good. And then we've got to, possibly schedule another surgery. Now, if they're on my back, I can wear a t-shirt, I can get on here and I could talk to you guys. But the next one that I'm having is actually right smack dab in my forehead. And it is pretty gross at the very beginning when they do it. So you guys wouldn't want to see me even if I was willing to get on and do it. But again, thank you so much, Josie. And I just love that you guys have all been on today. I love that you guys have been asking questions about these portable mortgages. And about the 50-year terms. And this is what we do every time I do a show. This is information that has come out. So make sure if you're not already subscribed to my emails for my newsletters, make sure that you text me, give me your name so that I can put you in my newsletter system. And give me your email address. And that way you will get an email from me. And like I said, I'm sending those out about every 7 to 10 days. So just in case I cannot get on and do a show, you will still get all of the updated information of what is happening this week, what is going on with the market. And if this is the first time you're watching the show, or this is the first time that you have gotten a text notification in, a couple of months that I'm live, it is because you are not subscribed to the right text message to get the show reminders. So number 1, text LIVE, LIVE, to 844-935-3634. That will get you subscribed for every single time that I go live. My mom list is still there, and I'm only texting out to that list about once every couple of months. So if you want to know every time that I go live, then make sure that if you got a text message today, just respond live. If you've never texted before and you want to get in on getting these for live shows so that you can ask your questions and get your answers, text 844-935-3634 and text the word live, LIVE. Guys, go to my website, mortgagemomradio.com. There is a contact us. You can book an appointment to get a one-on-one with me. You can do your application on there. You can run calculators, which are super cool. Anything that you guys can need can pretty much be found on the website. And you can call my office. You can talk to me 99% of the time. I am the person that answers the phone. If it goes to the voicemail, it just means that we are busy and on the other line. We return every single phone call. So please, please, please leave a message. You will hear back from us, I promise. So with that, I'm going to look at my notes because I made notes about what we needed to talk about today. Okay, so I did want to talk about this. So couple of things really quick for market update for this week. So the government shut down. With the government having been shut down for an entire month, there were many, which we've talked about if you followed the show for a while. Our interest rates move up, they move down. People put money into mortgage-backed securities and take it out, and it's based on what they feel is going on with the market. A lot of the decisions that those investors make on where they're moving their money stems around many of the unemployment reports, inflation reports, everything that we've talked about in this show in the past. All of those reports were delayed during the government shutdown. So we went a month without getting any of those reports. So a very, very big packed week is this week. We've already gotten some reports Monday, reports Tuesday. We had some reports today. We're having a big report tomorrow that could move interest rates up or down depending on how it comes out. And that is the unemployment report for October is due tomorrow, even though it should have been out weeks ago. So, there is a lot going on financially in the markets, a lot of information, a lot of data. This is the heaviest week I've ever seen in my entire career. And the things are volatile. Interest rates are moving and they're going up and they're going down. So if you need help navigating, again, I'm always here. I'm happy to help. Please give us a call. But I did want to make sure you guys were understanding of that for this week. And then a couple other things in my newsletter that I sent out today. I did send you guys the National Association of Realtors forecast for 2026. It was very, very positive. It looks like they are expecting a 14% increase year over year in transactions within the real estate market. So it looks like we're going to go up at least 14% in 2026 in overall transactions, people buying, people selling, people doing things. So that is very positive because when there's more real estate transactions, economy is typically much better. And then I did also in my newsletter send you guys the National Association of Home Builders and what they're seeing right now, which is also a really great indicator of market trends and things. So once again, I'm going to finish the show with this. If you'd like to get these newsletters from me, I'm sending them out once every 7 to 10 days. It'll keep you abreast of everything that is current right now and exactly what is going on with the real estate and mortgage world, with the market. Please feel free to text me 844-935-3634. Give me your name, give me your email address, send me an email, go to the website, click on contact us and give me your name and your email. Email me, Debbie@mortgagemomradio.com. Just again, name, email address. I will make sure I get you guys added so that you are also getting these newsletters that I'm sending out with all of the data and important things that you need to know. So with that, I'm going to run super fast, quick commercial just to make sure nobody else has any questions remaining in the show. And then I'm going to shut it down. So if I don't see any questions come through, I hope you all have a wonderful rest of your week. Next week, Wednesday, that is the day before Thanksgiving, is it not? Let's look at a calendar. I got to pull this up because I don't want to say I'll see you next week and then you're not going to see me next week. So that is Wednesday, the day before Thanksgiving. So if there is important information that cannot be skipped, I will jump on and I will do a show. But if there is absolutely nothing going on because it is the day before Thanksgiving and there are a lot of people, it is literally the very last day of November that we can close any purchase transaction. In the month of November, there is not another day that we're open in November for buyers to close or for homes to sell and close. So if there is nothing going on that is important, I will skip next week's show, and then I will be back the week after Thanksgiving. But if there is something huge, I'm going to jump on here and I'm going to make sure that you guys know and that you do hear from me. So just in case you don't see me, I hope you all have a fabulous Thanksgiving, a fabulous holiday. I really hope that it is phenomenal. There is another comment came in and it says it's from Imagine 2010. It's not showing me your names, you guys. So I don't know who you are unless I've seen you before. Debbie, thanks for your time and you take care. May God continue to keep his healing hands on you. Peace and love to you and your family. Oh, I love you guys so much. Thank you for that. Really, truly, you have no idea how that makes me feel. So thank you for the words. So again, you might see me Wednesday, you might not. Subscribe to the newsletters. Let me know if you want to get them. And let's run a quick commercial. If there's no more questions, then I will close down the show. If there are more comments, more questions, I will come back. So do not go anywhere if you're typing. Keep going. All right. Stay tuned. This is Debbie Marcoux, the Mortgage Mom. I just wanted to remind you that when you think of something that you need in real estate or mortgage, to think about Mortgage Mom Radio. We can help you with your purchase, your sale, your refinance, your home equity line of credit, reverse mortgage, hard money, construction, you name it, we're here to help. So give us a call. It's 844-935-3634. That's 844-WE-LEND-FOR-YOU. WELEND and the number 4. Or head on over to my website at mortgagemomradio.com. Oh, Michael. Okay, thank you so much, you guys. I don't know why Streamlabs, which is what I use to stream to you guys, is actually did an update today when I turned the computer on for the first time here in 6 weeks, 5 or 6 weeks. And for some reason, all of the comments that are coming in today, usually I can see your screen names, but I can't. It's just showing me at Imagine 2010 MJM or at Tiffany Wapshall. So that's how I knew it was Tiffany. And then even Mary, my girlfriend that gets on, hers was at user ZC3VE, like, crazy numbers. So it's not actually showing me your screen name. So I apologize. But Michael, thank you so much. I truly appreciate that. And I know that you get on and you watch the show. So thank you also for being a follower of mine. I do truly appreciate it. And then I see that Rochambeau, I love that. Great show, Deb. Thanks. Oh, and that says Frank Moore. So Frank, thank you for giving me your name. And so that way I know that it's you. And thank you guys all. I hope you have a great one. Again, if there's something pressing, urgent, and that you have to know about, I will be back here on Wednesday. But if there is nothing going on and it is the day before Thanksgiving and it is the last day of the month to get people closed up and moved before the holiday, then I am going to take that day to get people closed and then to get myself and my family ready for the holiday. So I hope you guys have a fabulous one, and I'll see you all real soon. Bye-bye.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
I'm Debbie Marcoux, and I am the Mortgage Mom. I'm licensed by the Department of Financial Protection and Innovation under the California Business Consumer Services and Housing Agency, NMLS ID 237926. Also licensed in Arizona, 0941504. Florida, LO 76508. Georgia, 69178. Hawaii, 237926. Idaho, MLO 208-023-7926. Illinois, 031.005-8339. Nevada, 57237. North Carolina, I-210940. Oregon, Tennessee, 184373. Texas, Washington, MLO 237926.